Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of cryptocurrency tax and why it's a bit more complicated than it needs to be. We're going to go through some of the more frequently asked questions. The idea about what makes cryptocurrency so darn confusing to people is that most people consider it currency, right? Cryptocurrency. You use it like currency, right? You go in and you use a Bitcoin or Ethereum or whatever it is to acquire something, but the IRS doesn't look at it as currency. The IRS looks at it as property, and so when you're going in and you're using your virtual currency to purchase something, what you're actually doing is exchanging that for something else, and so the rules are different than when you're just using currency, okay? It's not backed by the government, and so it's a whole world of different tax treatment. In the upcoming years, and even recently, the IRS is devoting significant amount of resources to cryptocurrency for the simple fact that they believe that many people are getting by without paying their due tax. Recently, there's been rounds of soft letters, 6173, 6174, and A, basically telling taxpayers, hey, we have information that may show that you're not compliant, you should take care of that, right? Soft letter is not an audit. Think of it as like a pre-exam, pre-audit. Then you've got operating hidden treasure, the J5 initiative. The idea overall is that the IRS wants to crack down on cryptocurrency tax-related issues, okay? First, let's start with some of the common domestic crypto questions. One, are you taxed on the purchase? No, right? If you purchase an item, if you purchase some cryptocurrency, let's say, the mere purchasing doesn't have any tax recognition. You have something that's going to establish your basis. You purchase Bitcoin for 40,000, that's your basis, okay? That is the value of what you purchase. Just like if you purchase a house for $500,000, let's just say you bought it cash, you've got $500,000 basis in the home, okay? Are you taxed on the growth? No. So you're sitting home, you're incessantly online watching your Bitcoin go up to 50, down to 30, up to 60. That is not taxable. Why? Because there's been no recognition. There's been no gain recognition. The asset, you're still holding it and it's going up and down, but you haven't sold it or exchanged it. So to you, nothing's come of it. It's not like you have an investment where income is accruing. Certain investments, for example, dividends in a fund may accrue. That's generally going to be taxable, subject to certain limitations and exceptions and exclusions, okay? This is just an asset, and that asset is going to fluctuate in value, but those fluctuations are not taxable. So what are some of the taxable, right? First is the income, okay? It's only taxable when it's income. So here are some examples. Let's say you took that crypto coin and you exchanged it for another one, and you ended up coming ahead $10,000, okay? That difference versus what you received in exchange for the crypto is taxable as gain, right? You received 50,000, you purchased it for 40,000, okay? I'm assuming, that's the example I was using, that you purchase it for 40, right? So you purchase it for 40, you acquire it for 40, you sell it for 50, that's your gain, okay? $10,000 gain, short-term, long-term capital gain, depending on how long you held it for. Let's say you received it as income, right? Let's say instead of receiving cash or check, you receive cryptocurrency. Okay, great. Well, now it's going to be taxed as income tax. It doesn't. You don't get to tax it as gain because you didn't get it from an exchange per se. Instead, you're receiving it for work performed, and then you're basically taxed as income. If it's being used in lieu of currency, but for the purpose of income, then generally you still have to pay income tax on it, okay? And then if you exchange it, it's a little different, right? So in the first example, you bought it for 40, you sold it for 50, 10,000 gain. When you're exchanging it, you have to look at what your basis is, what the basis is of what you're going to be exchanging, and then what you receive. And it's the same concept, only you're not selling it for money, you're receiving another asset in exchange for it. It gets complicated, right? Especially because you may be using it as currency, right? But the IRS isn't treating it as that. They're treating it as an exchange. You go to the coffee shop, you use some, form of virtual currency to purchase it, where you're not really using it. You're using it as currency. The IRS isn't treating it that way. International is much more complicated for the simple fact that the rules are not hard and fast right now. They're still kind of in flux. Is it required to be filed on the FBAR? If it's in a bank account that has like let's say it has both a hybrid account, so it's got crypto and it's got regular currency, then yeah, it's probably reportable. In fact, a recent notice came out, FinCEN Notice 2020-2, which basically says they're going to push for people who have crypto on exchanges and other similar type of account equivalent to have to report that. Is it reportable on FATCA Form 8938? Well, probably. If it's in your personal wallet, probably not. If it's in an account, if it's on an exchange, you may have to. Why? Because the FBAR is for foreign bank and financial accounts. So there's always an argument that it's not necessarily an account per se, but the Form 8938 is for specified foreign financial assets, and since the IRS treats crypto as property, chances are they're going to push that it should have been reported on the 8938. Much more complicated is if you've got it in, these up and coming ETFs and other funds, okay? Because then you have to report the fund, right? You're probably not going to be able to get away without reporting the fund just because the crypto is part of a fund. So not only will you have an FBAR requirement, but you may also have an 8621 for PFICs, passive foreign investment company, mutual funds, ETFs, CCOFs, things like that. If you're out of compliance and you want to get into compliance, there's various programs available. There's VDP if you're willful or can't certify under penalty of perjury that you're non-willful. Streamlined programs, reasonable cause, and delinquency. We have lots of free information available on our website. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.